Hello, ladies and gentlemen, and today we will be learning about the stock market crash of 1929, also known as Black Tuesday and the Great Crash. During the stock market crash of 1929, thousands of businesses were forced to close. Millions of people lost their jobs. 750,000 farms were closed due to bankruptcy, and over half of the United States banks went bankrupt. Countries across the world were still suffering from the effects of the war and were in great debt. Germany was in greater debt, and this is when Hitler rose to power in an attempt to save his country.
Now you're gonna learn how the big crash actually went down and what happened in those 4 devastating days. The stock market crash of 1929 is a 4-day collapse of stock prices that began on October 24th, 1929. It was the worst decline in US history. The Dow Jones Industrial Average dropped 25% and it lost 13 billion in market value. That's the equivalent of 396 billion today. It was more than the total cost of World War I, and it destroyed confidence in Wall Street markets, which also led to the Great Depression. The first day of the crash was Black Thursday. The Dow opened at 305.85. It immediately fell 11%, signaling a stock market correction. Trading was triple the normal value, and Wall Street bankers feverishly bought shares to prop it up. The strategy worked. By the end of the day, the Dow was down just 2%. On Friday, the positive momentum continued. The Dow rose 1% to 301.22. A short trading day on Saturday removed the gain. The Dow closed at 298.97. On Black Monday, October 28th, the Dow fell 13% to 260. This made Black Monday the worst part of the stock market crash. One day later, on Black Tuesday, the Dow fell another 12% to 230.07. Panicked investors sold over 16.4 million shares on this single day. Black Tuesday was the 4th and last day of the stock market crash of 1929. It took place on October 29, 1929, when investors traded a record of 16.4 million shares. They lost 14 billion on the New York Stock Exchange, worth 199 billion in 2017 dollars.
After effects after that and how it led to the Great Depression. Thousands of businesses were forced to close in the US. Millions of people lost their jobs. Almost half of the United States banks went bankrupt. By 1935, around 750,000 farms were closed down due to bankruptcy. Countries across the world were in great debt and were still suffering from the effects of World War I. Germany was even in greater debt, and this was when Hitler rose to power in an attempt to save his country. This eventually led to the Second World War. The Black Tuesday losses destroyed confidence in the economy. That loss of confidence led to the Great Depression. In those days, people believed the stock market was the economy. What was good for Wall Street was thought to be good for Main Street. The stock market crash caused people to withdraw all their savings, which is called a run on the banks. The banks didn't have enough cash on hand and were forced to close. When they reopened, they only gave savers 10 cents for every dollar they had deposited. There was no Federal Deposit Insurance Corporation to ensure savings. Overall, the Wall Street crash of 1929 was the spark to set off the Second World War and the start of the Great Depression. Thank you for watching, and I hope you enjoyed and learned something new.